Looking for strategies to help you protect your portfolio in these uncertain times? Visit robblack.com. robblack.com, powered by EP Wealth.
Stocks are sinking. Oil nears $100 a barrel. The Mideast conflict is widening. New attacks signal that the Iran war is escalating across the Middle East to further risk disruption to crude supplies. Iran's new leader says the Strait of Hormuz should stay closed. Reopening it could take weeks. Trump's oil plan could leave the United States reserves at the lowest levels since the 1980s. Wow. Not the greatest headlines. Let's take a look at the stock market. Starting to show a little bit more weakness around the edges. There was an analyst who this week said the odds of recession have gone from 10% to about 35%. If we're having this conversation next week, that might be 40%, 45%. S&P 500 is down 1.1% today. Getting a little bit weaker as the morning goes on. The Dow Jones Industrial Average down 1.2%. The NASDAQ down 1.44%. The Russell 2000 down 2%. The VIX is sitting at that panic area. Stress, fear. It's right around 26.7. A 27 reading is typically pretty stressed. Retail investors are getting spooked. Let's take a look at some of the other parts of the market. Gold is not doing what it should be because this isn't the typical scenario. Oil sitting near 100. $96.51. That's going to lead to inflation. Potentially, we're talking stronger dollar around the world right now, which is in direct opposite of what the Trump administration had laid out for the first 15 months of the year, where we had a weak dollar, and that caused gold to rally even further. 10-year Treasury note sits at about 4.25%. Anything above 4, you lean towards staying in income, generating ideas. Anything below 4, you think about stocks. This is not enough of a pullback yet for me to commit money to it. I may do it in a few phases if things continue to play out in this direction. Silver's down, gold's down, copper's down, platinum's down. Bitcoin sits at 70,551. You're not going to believe what one analyst said about Bitcoin today. Maybe you'll believe it. I don't know. I don't want to be too super sensational. Ethereum's at 2,076. Tether still at $1. It's a lot. I'm not going to go over that cryptocurrencies. I don't own any, so I'd be catering to you in a funny way, if that makes sense. I think the big story this morning is Iran's leader says the Strait of Hormuz should stay closed. Military experts say reopening it could take weeks. Iran's supreme leader said the move would pressure the enemy, raising the stakes for global oil markets and underscoring how difficult it may be for the United States military and its allies to reopen the critical shipping lane. Unblocking the Strait of Hormuz is shaping up as a remarkably complex and time-consuming task. Thus, the fate of the oil markets, the global oil markets, and the global economy rests on whether ships can traverse the 22-mile wide waterway from the Persian Gulf to the Gulf of Oman. This is 10 days after the United States and Israel attacked Iran. There's no clear plan for reopening it. Iran's navy has been severely depleted by the United States, but the country doesn't need large attack ships to scare commercial vessels away. Its weapons include mines, fast attack boats, missiles, and drones. Layered on top of each other, they can become exceptionally difficult to remove. The war's getting a little bit nastier. Keep in mind, when Trump started this, I guess we have to give some credit. He said it could last 3 to 4 weeks. After 10 days, it's looking like 3 to 4 weeks is much more realistic versus previous campaigns, which tend to be weekend or week-long events. Foreign stocks are reeling. Buying on the dip is bringing up questions from people like me who are more institutional. Gig workers are feeling the pain at the pump as gas prices hit 21-month highs. A network of millions of Americans who offer services like making deliveries or providing rideshare services are feeling the effects of rising gas prices. The average price of unleaded gas jumped 22% over the last month to its highest level since mid-2024. So does that mean you should keep an eye on gig-type stocks like DoorDash? I do think so. The average price of unleaded gas jumped 22% over the last month to about $3.59 per gallon. National average is its highest level since May 2024. For a segment of the gig workers, increasing gas prices are not only immediately painful, but also can sort of inject some fear into their day-to-day. You're seeing some of the drivers on DoorDash and Uber do more mental calculations to ensure that they're on the most profitable trips possible. I happen to live, I used to call this the boonies back when I was like 10 years old. I don't know if that's even like acceptable. I don't even know what it means. Oh, you live out in the boonies. So for the idea of me to get an Uber to the airport or an Uber to the city, I have to leave and park in a shopping center. They won't come out to the boonies. The IEA, the International Energy Agency, countries are releasing 400 million barrels of oil from emergency reserves in response to the Strait of Hormuz supply shock. The U.S. is kicking in 172 million barrels. Oil prices are rallying. We're seeing attacks on cargo ships in the Persian Gulf. Iran is reportedly making threats about the Red Sea as well. Another AI play is laying off AI workers. Atlassian said it's laying off about 10% of its workforce, equal to about 1,600 people. They're the maker of collaboration software. Is it AI washing, or is the company struggling? Is it the Jack Dorsey path, or is there trouble in software? Some of the research that I've been digging up is telling me that the big players in software are going to be fine, but the smaller players might not be so much. Stryker was hit by a cyber attack that may have been tied to an Iranian-linked hacking group. The Polish government's also investigating whether Iran is behind a failed cyber attack on its nuclear research center. CrowdStrike and Palo Alto Networks, their stocks are looking very attractive in the short term. Maybe like a trading vehicle. Piper Sandler raised their price target on ExxonMobil to 186 from 145. That makes sense. An obvious winner in the Iran war with higher oil prices. How long? The word sustained should be underlined here. A sustained increase in oil prices. Question mark. How long will it last? They're starting to see some odd plays commingle with one another. Let me explain. The Iran war is potentially creating a helium shortage. Qatar, spelled Qatar, is a big producer of helium as a byproduct of liquefied natural gas. Helium is used in the semiconductor manufacturing. So what are some other plays that do natural gas? One is a company called Linde, Linde. Wells Fargo upgraded Occidental Petroleum. Not one upgrade, but two, from sell to buy. It's not the recent spike in oil prices. It's that Occidental's drilling in the prolific Permian Basin is more efficient, allowing it to spend much less while keeping production levels the same, so says the market. Bloomberg intelligence analyst has a prediction for Bitcoin falling to 10,000. That is a hard one to read. In large part, I know people who have invested their life savings in Bitcoin. But let's talk about it. Some analysts disagree, saying Bitcoin is too big to fail. Such a fall would require an extreme systemic shock. Mike McGlone, he works with Bloomberg Intelligence. His prediction is that Bitcoin will crater to 10,000. He says the correlation between Bitcoin and all risk assets is much more significant than it was a few years ago. His quote was, "My point is, if you're buying any type of cryptos now, you have to hope the stock market goes up." And it's been cryptos that have been trading horribly versus stocks for almost 2 years now. good luck for that to change, he said in an interview. Now, here come the skeptics. And it should be noted, pay attention to who they work for and work with. Bitwise CIO Matt Haugen, he predicts Bitcoin will hit 1 million in 10 years. Unsurprisingly, he disagrees with Bloomberg. Bitcoin has fat tails, meaning extreme events are possible. His quote was, "I like Mike and respect him as a data-driven analyst. That said, 10,000 strikes me as extremely unlikely. Maybe if government stopped running deficits, or there's a catastrophic bear market for risk. But both of those strike me as extremely unlikely. Critics have been prophesizing Bitcoin's doom for 17 years. They've been wrong so far. I expect they'll be wrong again," so says Hogan. How do you feel when I say Bitcoin could go to 10,000? It's at 70,000. Not that long ago, it was at 130,000. Bitcoin ETFs have registered 1.1 billion in inflows so far this month. After enduring multiple deleveraging cycles in recent years, the industry structure is significantly stronger. A lot of people are coming to the defense here. Ryan Lee, he's the chief analyst at BitGet, also said that Bitcoin dropping to that level is highly improbable, even amid macro uncertainty and geopolitical tensions. I have no dog in the fight. I've got no pony in that show. I've traded successfully in some digital currencies, but it's not my long-term play. President Trump is telling CNBC that the U.S. is not leaving Iran until the job is finished. What's the job? Is it regime change? I don't think, from what I'm hearing, we can't leave the current regime in place because they hate America. Give them time. They rebuild their supplies and munitions. And this happens again. One of the more interesting pieces of research that I read yesterday, or might have been the day before, was tied towards the idea that the United States, instead of taking out Iraq, should have taken out Iran. And you can go back to 1979 when they had American hostages in the country. That should have been our moment. 1979. Wow. That means we're going back 50 years-ish. President Trump also said on Truth Social that the United States is the largest oil producer in the world by far. So when oil prices go up, we make a lot of money. Only problem is Americans pay a lot more money. The idea of the one big beautiful bill providing oomph to the United States economy is starting to fade fast. As we're paying more at the pump, we have no focus on electric vehicles anymore. There's no way out of this. Corporate America's decision to bring Americans back to work means we're consuming more gasoline. Elsewhere today, in the initial jobless claims for the week ending March 7th decreased by 1,000 to 213,000. Continuing claims the week ending February 28th decreased by 21,000 to 1.8 million. First-time unemployment claims remain just above the 200,000 mark, reflecting a low firing environment. That's good news. But we're also not adding a lot of jobs, which is bad news, as we saw with the jobs report that came out last Friday. The trade deficit and other pieces of economic data today narrowed to 54.5 billion in January from a revised 72.9 billion deficit in December. What you need to know about that is the monthly trade deficit returned to the 50 billion range, which has been a familiar zone since last year's implementation of tariffs. Marvel Technologies is showcasing an industry-leading end-to-end connectivity solution for AI data center infrastructure at a conference called OFC 2026. They announced that they will showcase the industry's most comprehensive portfolio of AI data center connectivity solutions. That's an interesting play if you look at which one do I want to own? NVIDIA, AMD, Broadcom. You fill in a couple more, or do you want to own a really guts kind of play like a Marvel Technology, ticker symbol MRVL? Analyst Brandon Nipsel talked about Apple. He works at KeyBank Capital Markets. He sees mixed spending trends. Says stock lacks a near-term catalyst despite easing gross margin concerns. His research shows that spending is down well below the 3-year average of down 4% month to month. It's down about 9% month to month for the software. He's less worried about the gross margin pressure investors are fearful of, but doesn't see a catalyst with stock trading in line with its historical valuations. He's updating his estimates to reflect recent product introductions and are generally in line with consensus expectations for 2026, so very neutral on the stock. Bernstein is talking about Netflix today. They see 2026 earnings per share upside as margin outlook appears conservative, despite near-term engagement concerns. The analyst is Laurent Yoon. His quote was, "What is the range of earnings per share upside for 2026? Netflix shares recovered quickly after withdrawing from the race, while engagement concerns and debate around its strategic options could cap near-term upside. There's no quick fix. The conversation has shifted back to Netflix's fundamentals and the potential for 2026 margin and earnings per share upside. Netflix 2026 margin guide sits at 31.5%, which is a modest 50 basis points expansion from 2025 once normalized for the one-time Brazilian tax." Can you imagine looking so deep into things that you're looking at the tax rates? I find that to be an interesting long-term name, especially if the market gets weaker. They did the Harry Styles concert that you can watch right now on Netflix. It was recorded last month, I believe, and just posted on March 8th. They're doing a BTS concert that's going to hit March 21st. If I was 21 years old, that's my music probably. I work with some people that get really, really excited about Korean pop. K-pop, if you will. Lululemon Athletica target was lowered to 250 at BTIG Research. BTI Research lowered their target to 250 from 303. Lululemon, you may remember from Athleisure. You may remember that they had the black sheer pants that you could see through. Women were going to yoga workouts and ooh-wee, you could see their tushy. It's pretty interesting about product and merchandising. I don't own Lululemon. I think I could have made a case for it a few years back. I never pulled the trigger. One of the things that's interesting to note is Fabletics, and this ties into Lululemon, and it shows you the way my brain works. Fabletics is getting into the denim wars. Now, Fabletics is known for popular joggers, hoodies, and sports bras. To fitness enthusiasts, it's known for people who work from home. They're launching into denim as consumers move away from athleisure. The sports apparel will grow just 2.3% this year, while denim has increased 28% since 2020. So Fabletics, they're a retailer of athleisure, and they're saying we're going to pick up some denim. I've seen some of their ad campaigns. Holy mackerel. As you get older and you look at young 22-year-old models, male and female, wearing denim and athletic clothes combined, and you're like, ooh, I wish I was 22 years old again, and I'm not. I have a doctor's appointment tomorrow, and one of the things I'm going to say is, I think I'm losing muscle mass like an old person. And I think she's going to say, I think you're losing muscle mass like an old person. You need to be at the gym more or doing something. So back to Fabletics. They're joining American Eagle, Gap, and Levi's with aggressive campaigns that starred Sydney Sweeney, Beyonce, and Travis Kelce. Fabletics doesn't use big celebrity endorsers. They're just not that big of a company, but they sell a lot of product. And if you will, in the world of tech, denim is AI. Picking up what I'm putting down, if you're extend that a little bit further, you would say software as a service might be compared to athleisure. I don't think it's that dramatic. But that's a pretty big cut by analyst at BTIG, and it tells me I want to stay away from Lululemon. These are concerning times on the market. It's a great time to reach out to me, Rob at robblack.com. You can sign up at my webpage, robblackshow.com. Let's get you a preliminary plan going if you're worth $500,000 more heading towards retirement or in retirement. You really shouldn't be sitting in this Iran war thinking, oh, I'm good, especially if you're taking RMDs already. You need to have a really good financial plan, and you need to know what you're doing right and what you're doing wrong. We'll take a break here, but I just want to remind you now is a good time to reach out. Rob at robblackshow.com. I'm Rob Black. More show coming right around the corner.
What's the best way to choose a financial advisor? Download our guide at robblack.com. That's robblack.com. Powered by EP Wealth.
I'm back a little bit later in the morning and wanted to give you an update on the markets. We opened lower. We're starting to go sideways now. The S&P 500 is down 1.2%, down 84 points. The Dow Jones Industrial Average down 1.3%, down 642. NASDAQ down 1.55%, down 351. And the Russell 2000 down 1.6%. The VIX is still sitting around 26. Bitcoin's around 69,970. I'd love to hear what you think about Bitcoin and one analyst saying it could go to 10,000. I'm not seeing much green today. Occidental Petroleum on a nice upgrade. Plantier Technologies on announcing new partnerships. But I'm seeing Oracle, Micron, Intel, American Airlines down 4% today. That oil price, it's the number one barometer right now on the stock market. It's not fundamentals. Now, of note, I want to mention, on Monday of next week, NVIDIA is going to do their GDC conference. And there's going to be a lot of announcements about robots, and a lot of announcements about AI, and a lot of announcements about semiconductors. We expect to see the CEO of NVIDIA wearing his black leather jacket and being excited. There's a lot of things going on in the market right now, and one of the biggest ones from a business revenue and earnings side point of view is artificial intelligence. I don't think that stops with what's going on with Iran. I'm not saying the cavalry is coming, because I still think oil is going to be the number one determinant factor until oil gets back down to $80 a barrel. It's going to be tough for the stock market to make a lot of gains. Stocks sink, oil nears 100, Mideast conflicts widens. That's the headline today. Mortgage rates rise above 6% on global concerns. Someone asked me yesterday if they should start trading oil futures, and I go, you know what? I don't know. Sometimes it's a really wise thing to say, I don't know. Try not to get in over your head with where you are. I was even asked about some stocks that are just out of my purview at the seminar last night. And I thought it was important for him to say, I was asked about defense stocks. And I said, I report on them and I can read the research and give you some ideas. But my comfort level of them is not strong enough to say now's the time to do it. From what I've seen, it takes a little bit longer to get your return and to see the growth numbers after a war. You're seeing some companies that make missiles, 600 a year, up their numbers to 2,000 a year. That's a big number. But then you got to dig into the margins in other areas. I'd say if you're looking at defense stocks, look for something that works for you, maybe like a dividend. Uber announced a partnership with Nissan and autonomous tech startup Wave to launch a robotaxi service in Tokyo later this year. As part of the plan to expand autonomous services to 10 markets globally, Uber exited self-driving in 2020. Now it seems to be at the center of almost every buzzy press release, whether it's announcing a deal with Zoox to let Uber app users order an autonomous vehicle this year in Las Vegas and next year in Los Angeles. Jefferies analyst says they are uniquely positioned to benefit from autonomous vehicles. I like the idea of human drivers in Ubers and autonomous vehicle Ubers. Every now and then you see that story where there's a blackout in San Francisco and the traffic lights go out and the autonomous vehicles, the Waymos don't know what to do. I like the idea of a combined force. Uber shares are back near last year's lows on robotaxi fears. Jefferies is heartened by the company's diversified partnership approach to autonomous vehicles and sees a buying opportunity. A little bit of happy news. Pokemon has a hit for the Nintendo Switch 2. Nintendo shares have jumped 18% this week as a surprise hit has driven hope it could boost Switch 2 sales. Nintendo sold 2.2 million units of Pokemon Pokopia in the first 4 days after its release last week, making it the fourth best-selling title so far on the Switch 2. $80 for the game. I remember when video games cost $39. Now they're double that. Now, again, that shows you how inflation works. And I remember that from 35 years ago when I was a kid playing video games. Nintendo has previously forecast sales of about 19 million units of the Switch 2 for fiscal year that runs through the end of March. It so far has sold 17.37 million. Microsoft is going to show us a new Xbox hardware platform, I think for 2027, but not a lot of details on that yet. The head of Microsoft's Xbox recently left the company to retire. It's not lost on me that a lot of video games can now be played on your TV through streaming services. And you're like, well, that's not very fun. It's not like having a big old computer on your desk, whether it be an Xbox, PlayStation 5, or a big old computer. The TV, it's being run through the cloud. And there's a big old computer on the other side that you don't have to buy and upgrade. You just wirelessly set up your Xbox controller or your PlayStation 5 controller and play. Gaming is changing. Howard Schultz. He is famous for being West Coast. He's famous for Starbucks. He is retiring to Miami with his wife, joining a number of other billionaires who have recently made the Florida their new home state. Schultz reflected warmly on his past 44 years in Seattle. But that's a big cross-country announcement, no? The state of Washington, legislators there passed a new 9.9% tax on household incomes over $1 million. The tax is expected to pass the state Senate and be signed by the governor. Adios. I'm actually, a very small part of me is thinking about Miami as a retirement destination. I like the city, but am I going out to nice dinners and warm weather? I'm of course the warm weather, but the nice dinners, that's something that's driving my retirement. I was asked last night if I'll retire in California. I said, not Northern California. I've lived here for too long. And it's time to move on. I've got nomad genes in me. I might move to Southern California. But the more I was talking about it, my plan in retirement is something along the lines of being a nomad. Maybe having a home base. Maybe in Miami. And then spending 2 or 3 months traveling Australia. 2 or 3 months traveling New Zealand. 2 or 3 months traveling parts of Europe. Until we get really good AI translation, I can't do Asia because I'm so intimidated by the language. I don't do languages well. In fact, I'm probably as bad of a dancer as I am at languages. But Schultz purchased a $44 million penthouse in Surfside, Florida, an area just a short, highly secured jaunt from the private Indian Creek Island. The island is home to former Seattle resident Jeff Bezos. It's also got Ivanka Trump and Mark Zuckerberg, who recently ditched California to purchase a mansion there for a record-breaking $170 million. Google co-founder Sergey Brin also recently closed on a Miami area estate for $51 million. Washington's not alone in raising taxes on the rich. Massachusetts passed a millionaire tax in 2022, creating a blueprint that states like Virginia and Rhode Island are trying to repeat. California has a ballot measure that, if approved in November, would retroactively institute a 5% tax on billionaires. Rivian's in the news today. Their crucial R2 EV launch is set to begin with a $58,000 model in spring. Can't own an EV company, in my opinion, that's losing money. You can look at it and go, ooh, that looks pretty. But it's really tough to own companies that are losing money in the current valuation of the stock market. You can get a less equipped and less expensive R2 model in the near future that'll run about $45,000. Copilot from Microsoft is introducing Copilot Health. I actually like this idea. I don't know if I like it from Microsoft. And isn't it stupid that Tesla's come up with macro hard? Elon Musk is such an adult child. I wonder what happened in his childhood that he has to make fun of Microsoft with macro hard as a product. Put in a $420 price target on his acquisition of Twitter. It's pretty uncomfortable to watch a grown man from a distance like that. At some point in time, we've all had a test result that we don't understand. We've all worn a device that tracks our sleep. My Apple Watch tracks so much information. Some of it I just don't know. The truth is that most people don't need all that information. But the idea of sending it to a computer, an AI computer, to analyze it is attractive to me. I was telling someone recently that about 3 years ago, my Apple Watch alerted me. I was watching my son play soccer. It was a sunny day, and I was just standing, and my heart raced up to 155. Like, that's a hardcore run for me. I don't know if that's technically a palpitation. About 6 months later, it did the same thing. And at that point in time, I started to lose weight because I was like, third time I'm not waiting for. That could be a heart attack. So I've added more steps. I've gone to the gym more and lost the weight. That's how important GLP-1s are going to be in the future. I'm going to see my doctor tomorrow. I've never had a GLP-1, but I'm going to say, hey, can I get that and help maintain weight loss? And they'll probably say no. We'll find out. Copilot Health brings together your health records, wearable data, and health history into one place, then applies intelligence to turn them into coherent stories. The connection between your broken sleep and the reasons why become visible, where you stop scrolling symptoms at midnight and start having better informed conversations. I like the idea of AI for that purpose. Google is bringing more AI to navigation with Ask Maps features. What's this all about? Anytime I go to the East Bay or San Francisco or the Peninsula, I'm in the northern part of that area. I always open up Google Maps, Waze, or Apple Maps and try to figure out, is there traffic? Is this 1 hour trip really an hour and a half? So Google's launching a new chatbot feature called Ask Maps inside its popular Maps app. The company's tapping its Gemini AI technology to answer complex navigation questions. Still don't know what this product's about. So here's what it's about. Users can ask Maps questions like, my phone is dying. Where can I charge it without having to wait in a long line for coffee? Or is there a public tennis court with lights on that I can play at tonight? The results are personalized based on prior searches and saved trips in Google Maps, making it easy to turn plans into action. Google Maps is fundamentally changing what a map can do. I don't get the feature for myself yet, but I do like the idea. For instance, let's say I'm flying on Friday. I can ask Google Maps, how many times has TSA been slowed down out of Oakland Airport? How many times has there been road construction at 6 in the morning? I'm one of those people who will wake up at 4 to fly at 6. I'd rather get to my destination and do it on the first flight of the day. Fewer people. Just my thing. Ask Maps starts rolling out today in the United States and India on Android and Apple iOS, with desktop coming soon. That's a product that will develop nicely. Morgan Stanley analyst Brian Nowak said the unit has been trying to increase revenue, including by licensing new sets of mapping data for companies to use as they build products around renewable energy. Google doesn't break out revenue from Maps, which has historically been one of the search giant's most under-monetized products. JP Morgan today in a research report shows the first persistent signs of weakness from retail traders in 2026. For the first time this year, retail investors are showing persistent signs of weakness, with the weekly purchases decelerating by 30% after defying seasonal patterns and making February their third largest month on record. When you shake out the retail investor, that's a good thing. I can beat retail investors hand over fist year over year with stock picking. But dang, do they get momentum going. When you break that momentum, you break their spirit. And you start relying on people like me a little bit more. Monday marked the largest net selling day in the single stocks in a month, before purchases resumed at a positive, yet below year-to-date average pace on Tuesday and Wednesday. Retail traders crushed it last year to both market timing and stock selection, with a heavy focus on AI-linked plays. Their stock picking choices, aside from reduced sizes, remained relatively optimistic. Retail investors again are positive on tech mega caps, including Oracle pre and post earnings. They're cutting their exposure to energy stocks, which is actually a really good idea because energy stocks should be sitting at a 52-week high as oil moves higher, but it's not. If oil moves to 200, you want to be in those energy stocks. It takes a lot to break the resolve of retail traders. In 2025, the group was undaunted by the tribulations that the market encountered in the first 4 months with the Trump tariffs. One idea for you today, Freeport-McMoRan, their shares are about 10% from their 52-week high due to the Iran war. We need a lot of copper to build out AI data centers. We don't have enough at this point in time. So Freeport, McMoRan, ticker symbol FCX, they're going to have to pay more miners to go down in the mines, get more copper. FCX still is up by about 20% this year and more than 75% over the past 12 months. Much of the gains have come from expectations for demand tied towards the need for copper wiring in data centers. The stock is more than a proxy for copper prices, even after the Iran dip. Still up about 4.5% now for the year and more than 25% since March of 2025. Analysts are fairly bullish on the stock. There's a really good article in Barron's today about this. Jefferies analyst Christopher LaFemina is bullish, calling Freeport one of his top picks in the mining sector. He recently lifted his price target to $76 a share. This is not easy money. It's a $61 stock. If you're looking for a fast trade, it may not be your hit. Thought I would share it with you regardless. I'm going to wrap up for this morning. I'm going to come back in the afternoon strong. You can always find me online at Rob Black Show. If you have a question, drop me an email, rob@robblack.com. Say it's for the podcast, and I'll definitely do it. On top of that, if you're concerned about current markets, if you're in retirement or approaching retirement, let's get you a preliminary plan. I don't know how much longer I'm going to be working. It's always a question mark going forward. I have more than enough to retire. And little cracks are starting to show, like I could retire in Miami. My kids aren't done with high school yet. I think that's going to be my biggest push. After that, I'm going to want to relocate. So let's get you a preliminary plan. How much do you have saved for retirement? I'll ask a couple questions: age, assets, income, marital status, inheritance, kids, college costs, health. We'll talk about your financial statements, maybe your taxes from last year. See where we can help you. Get you a Monte Carlo scenario number, which is essentially your odds of success in retirement. Your odds of success of, do you run out of money on the day you die? Do you leave some for your spouse? Do you leave some for your kids? What's that number look like 20 to 25 years out based on data inputs on inflation, based on how you growth invest or growth in income invest or income invest, your budget, and much, much more. You can sign up for the event. Oh, not the event, but you can get a preliminary plan going. Drop me an email, rob@robblack.com. It's rob@robblack.com. I'm Rob Black. See you in the afternoon podcast.
Visit The Rob Black Show online at robblackshow.com. Listen to archived podcasts, market updates, and information from EP Wealth's certified financial planners online at robblackshow.com.